In the market, guys, there's a common theme that equity flows from the majority to the minority, which means that in the long term, majority of people lose. So in order for you to become profitable, in order for you to win, you have to start acting like the few, not the many. So today we're talking about psychological factors that drive the many, the majority of people, and how you as a trader can avoid them in your journey. The very first psychological factor we're going to be tapping into is called loss aversion. Loss aversion is a cognitive bias that describes a person who experiences twice as much pain in losing than the pleasure of gaining. Let's say you have a trade that you've put in place and losing that trade would be $500, but the gaining would be about $2,000. For a lot of traders, even if they experience the losing trade, you lost $500 and then you have a trade that wins, the $2,000. What that means is that $500 loss will still be very painful, will still be twice as painful as that pleasure of making $2,000 on that trade, or maybe it's $1,000, whatever your objective is. So taking losses is way more painful than winning, which explains why a lot of traders look to seek certainty, look for the holy grail. But the unfortunate thing is, in the trading game, there is no certainty. We deal in probabilities. And the reason why this is a dangerous mindset or a dangerous psychological factor to have is because it takes away the rationale that you need to succeed as a trader, which is a probability mindset rather than a certainty mindset, because there is no certainty. The next psychological factor we're going to be taking a look at as well is commitment. Commitment is being committed. It is very simple. Commitment paired with loss aversion are two powerful psychological factors. Let's say, for instance, because for a trader, the fear of losing or the pain of losing is so powerful, they don't want to lose. They're doing whatever it takes to not lose. Let's say they have a trade running and losing that trade would be $500 or $1,000, right? Let's say $1,000. The trade gets to $500. Okay. You know that the market conditions have changed. You're not closing out. You get to about $900, right? Now you start to move your stop loss. You get your stop loss now to $1,500. You know what? It's going to bounce back. And before you know it, you get to a point of no return. And then commitment comes into place, which means that, hey, you no longer want to lose this trade and you're willing to do whatever it takes. So you let $1,000 loss turn into a $2,000 loss, or maybe you even extend your stop loss even further, and before you know it, your entire account is gone. So loss aversion paired with commitment are two powerful psychological forces that drive the majority of traders and the majority of investors out there. And you have to learn to understand this, because hey, it might be driving you too. The third psychological factor to avoid, guys, is trading with a terrible inner game. And this is one that is very common in a lot of traders. You might even be doing it and not even know it, right? Say you have a stressful week, you're having a stressful day, but you're still coming to the market trying to make money, trying to think rationally. These are all things that are going to make trading a lot more difficult. Let's say, for instance, you have a relative or someone close to you that passes away, and you're in a very emotional state, but you're still coming into the market looking to trade. And one of the things I always say is trading has a funny way of bringing out things. Whatever you're experiencing inwardly, find its way to come out outwardly. So when you have chaotic outer world, or things are happening outside that is causing you to feel a little bit more emotional, maybe a lot more stressed than you normally will, it will start to show in your trading. So I always recommend to avoid times when you are dealing with a lot. Try to avoid coming into the market. Maybe your girlfriend just broke up with you and you're not in the best emotional state. I'm going to make $10,000 so I can show her. I'm going to make $100,000 in the market so I can go buy that Lambo, so I can, show her that she messed up, right? Whatever it is, take a couple of weeks to clear your head, to make sure that you are trading, you're able to trade in a disciplined manner and also in a confident manner as well. So we've gone over the psychological factors to avoid. Now we're going to take a look at some of the solutions that will allow you to become the minority in the trading game. And going over to loss aversion, the first thing is to have a long-term objective, right? So think long-term, not short-term, because having a long-term view means that you understand that, hey, you could lose today and still win big tomorrow. I always say the sun will shine again. When I was a beginner trader starting out, I was very immature and losses got to me like nothing. Like I wouldn't get out of bed. I just felt like if I had a losing day, the rest of my day was done. That was it. As a seasoned trader, I have learned that losing is a part of trading, and it is something that you can avoid because, hey, we deal in probability, not certainty. If we could win all the time and we could be certain about the trades that would win, we would all be multi-millionaire and probably richer than Warren Buffett and Elon. I would. But that's not the case, right? We deal in probabilities. So you have to maintain a long-term approach, and you have to remember that you can have a losing day today. And if you come into the market and you do the exact same thing, and you have a system, a reliable system, right? You can also profit day in and day out. But within those days, you will have days that don't go your way. It's just the facts of life. It's just the facts of trading. The other thing is to know your system. Let's say, for instance, you have a system that is 70% profitable, which means that 30% of the time you will lose. So out of 10 trades, you could lose 3 trades. Let's say, for instance, maybe it's even 50%, right? So you could have 5 trades that win, 5 trades that loses. You can't control whether you get those 5 trades back to back to back to back to back. So when you experience that, it is also important to take a look at your system. It's like, is this part of my system? Is this normal? When it comes to commitment, the exact same thing, because loss aversion and commitment, they go hand to hand. And the solution for terrible in a game is to work on yourself. A key fundamental aspect of succeeding in trading is working on yourself, understanding that what you are experiencing inwardly always comes out outwardly. So becoming, just a better person, working on letting go of the past, letting go of certain situations that didn't go your way, and learning from those situations, right? If you're having a stressful day, making sure that you do things to distress you. If you are experiencing, a chaotic time in your trading, take some time off, right? If you've lost an account, you've blown an account, whatever, rather than jumping right back to it, take some time off, right? So all these things are things that you can easily do to help you when things are not going well, so you can become a part of the few. And one more thing you can do is asking yourself how you feel when you come to the market. As if you're coming into the market tense, the likelihood that you're going to be having a terrible day is significantly high. So asking yourself how you feel is important from a scale of 1 to 10. And if it is at a 7, at an 8, or you don't feel good, take the day off. Take the day off, watch the market, maybe trade with a demo account and just do something else, right? Maybe go out, maybe you need a break from the market even, right? So these are all psychological factors that you can avoid that will make you part of the minority of people that are profitable when it comes to the trading game. And that's the video, guys. Thank you for watching. Hope you found this video insightful. On your way out, don't forget to hit the like and subscribe button. I'll be seeing you in the next video. Cheers.